Welcome back, everyone, again. So, the last session that we have ended with the concept of blocked credit, and we have done two set of blocked credit and said we will do the rest in today's session. So, let's quickly move to the next set of blocked credit discussion. Next is blocked credit relating to immovable property. So, what is the concept of blocked credit? Again, we had discussed in section 16 there are 5 conditions for somebody to satisfy for them to take ITC in a relevant month. So whichever month you finish all the 5 conditions, that is the month you will take the credit. In examination, you might have some conditions still pending. That will be the way that questions would be given, and you cannot take that particular credit. So you'll have to go back and then say the working note saying that this condition is not satisfied. That's why this credit is not allowed. This is how you will write that working note. And even after you satisfy all the conditions, there are certain purchases not eligible for input tax credit. Those are actually called as blocked credit or ineligible credit. The reason why they are making it ineligible is because they know that in certain cases, if I allow the credit, people could be largely misusing this particular facility of availing credit. Okay, so we have discussed two big charts wherein blocked credit were discussed together with examples and everything. Now, blocked credit relating to immovable property. Now let's look at what are the blocked credit that we have. Section 17.5 C and D. What is it section 17.5 C says? It says works contract service for construction of immovable property is a blocked credit. Works contract service, that's a term that we have in GST. First, we need to understand what do you mean by works contract service. Then only you can understand it is used for construction of immovable property. Okay, so this is the first understanding. Then it could be that, or it could be inward supply of goods and or service for on construction of immovable property also. So you take labor, you purchase cement, steel, everything for on construction. That is also blocked, which means effectively any construction you do of an immovable property, you are not eligible to take ITC on the taxes paid on the same. But there are two exceptions that is available. We're going to read that as well. So exceptions means credit is allowed or not allowed. They're saying credit is allowed in following cases. One, inward supply of works contract for outward supply of the same. So when you do a subcontracting, so if you're a works contractor, you take inward supply of works contract to provide outward supply of works contract, you're eligible to take ITC. Then works contract or inward supply for on construction of immovable property but being plant and machinery. You're doing construction of plant and machinery, then you can take ITC. Okay. Next is, what is that construction means? They said inward supply for construction of immovable property, works contract for construction. Does it include reconstruction? Does it include renovation and repair? They said yes. Construction includes reconstruction, renovation, repair, etc. to the extent capitalized in immovable property. They said construction would include reconstruction, renovation. As long as you capitalize that amount in immovable property, that is also considered to be a construction and you will not be allowed to take credit. Then they're talking about the definition of plant and machinery. They said plant and machinery is apparatus, equipments, machinery fixed to the earth by foundation or structure, but it excludes land and building or any civil structure, telecommunication towers, pipeline laid outside the factory premises. These are the topics that we have for for us to read. Now let's go and then try to understand it with examples. Suppose we had this discussion with Nokia company yesterday. We said Nokia is planning to do, they're planning to appoint somebody as a CFO and they were buying cars for them and all that. So Nokia decides to build a big tower in Mumbai called as Nokia Towers. That's their plan. So once they build this Nokia Towers will be, this Nokia Towers will be available where? In the books of accounts of Nokia, in the balance sheet, in books of accounts of Nokia, as asset, it will be mentioned building, isn't it? So once it is done, it will be shown as their asset. It means that it's capital goods for them. Now, how can they construct a Nokia towers? So this Nokia towers is going to cost more than 100 crores for them to construct. There are two methods in which Nokia can construct this Nokia towers in Mumbai. One, the entire construction can be, after buying the land, entire construction can be outsourced or given to some contractor. Suppose in our case, we have given this to a contractor called as Royal Contractors. Suppose Nokia has given this particular contract to Royal Contractors. Now, Royal Contractor will be purchasing all the material, doing all the labor, and constructing this Nokia towers fully. The entire construction is the responsibility of Royal Contractors. If Royal Contractors take up this kind of an activity, then the service of Royal Contractor is called as Works Contract Service. What's the service will be named as? It will be called as Works Contract Service. The Works Contract Service is nothing but service of giving both material and labor on a single contract on an immovable property for easier understanding. So if a contractor gives both labor and material on a single contract to construct, then it will be called as works contract. Now, Royal Contractor is giving works contract and it is subject to GST. So the Royal Contractor is billing 100 crores plus 18 crore GST. So 118 crore is the bill that is given to Nokia. Now the question to you is this: can Nokia take the credit of this 18 crore paid as GST to Royal Contractor for construction of this Nokia towers in Mumbai? What is your answer? ITC allowed or ITC is not allowed? ITC is not allowed. Reason? What is the reason? Because it will come under section 17(5)(c). It is nothing but works contract service for construction of immovable property. And that is what credit, it's a block to credit. Is a block to credit and that's not allowed as ITC. Are you guys with me? Are you understanding this? Very simple, straightforward, no? Now, is this the only way in which Nokia can construct this particular Nokia towers? No. They don't need to go to Royal Contractors and give full contract. Instead, Nokia decides they will appoint some laborers. They will purchase cement, steel, everything, and they themselves will construct. So to construct, Nokia decides to make own construction. They are purchasing cement, steel, etc. for 50 crores to purchase this, and on that they have paid GST. Can they take ITC on the cement purchased by Nokia to construct Nokia towers? No, that is also not allowed because section 17(5)(d), what it says, section 17(5)(d) says what? Inward supply of goods and or service for on construction of immobile property, example cement, steel, etc., is also a block to credit. Are you guys understanding this? Okay, so both of them are not allowed as credit for them. Now what happens? Okay, now Royal Contractor, what they do is that they don't have all the resources to construct the entire building. So some work Royal Contractor outsource it. So Royal Contractor went to ABC Contractor. What is that Royal Contractor did? Royal Contractor went to ABC Contractor and said, see ABC Contractor, I got a contract for 100 crore worth building. I want you to construct the foundation for that building. So Royal Contractor told ABC Contractor that you construct the foundation for me. Why? Because I've got a 100 crore contract. So out of that foundation, I'll give you 1 crore plus GST. 1 crore plus 18 lakh GST I'll give you. Now, Royal Contractors inward supply is a subcontract. Okay, so they are also taking inward supply works contract service. For what purpose? To provide this main works contract to Nokia. Now, my question is, can Royal Contractor, so as far as Royal Contractor is concerned, it is their inward supply. So how much GST is being paid on inward supply of works contract service by Royal Contractor? 18 lakh. Can Royal Contractor take the credit of 18 lakh paid on inward supply of works contract? Can they take? Yes, that is the exception. Okay. So if they take inward supply of works contract to provide outward supply of works contract, it is allowed as ITC. Similarly, the royal contractor has purchased cement, construction material, steel, etc. for 20 crore, paid 3.6 crore GST. For what purpose? To provide outward supply of works contract service. Can can this royal contractor take the credit of 3.6 crore GST paid on inward supply? Yes. So royal contractor will take credit because royal contractor is providing outward supply of works contract. For them, whatever inward supply that they make in terms of subcontracting or purchase of material and all is allowed as credit. So to whom it is not allowed, for Nokia it is not allowed. But for a contractor it is allowed. I hope this is clear. Suppose Suppose this particular Nokia has asked Royal Contractor to construct not Nokia towers, instead a plant and machinery, a big plant. They have asked them to construct a factory. In that, there are lots of machinery being constructed. So they have given a works contract to construct a machinery, plant and machinery. Now, can Nokia, and they have paid some, 10 crore plus GST of, 2 crore for construction of plant and machinery. Can Nokia take the credit of GST paid on construction of plant and machinery? It might be immovable property because the plant and machinery has a structure and it is, put to the earth. So it's an immovable property, but can Nokia take the credit on construction of plant and machinery? It's still there in the balance sheet as an asset, as a machinery, as a plant and machinery. Can they take the credit? Yes, they can take the credit because construction of construction or works contract service for immovable property being plant and machinery is allowed as a credit because it's an exception to the block to credit. Okay, for that ITC will be allowed. Now, what is plant and machinery? Now, Reliance Jio Reliance Jio is constructing a telecommunication tower. Can Reliance Jio, and they have given a works contract for construction of this telecommunication tower. Can Reliance Jio take the credit of that? Jio Mobiles, Telecom. They've asked royal contractors to construct them a telecommunication tower. Is this tower a plant and machinery? No, because if you go back and then refer plant and machinery definition, what it says, plant and machinery is apparatus, equipment, machinery fixed to the earth by foundation or structure, excludes land and building, any civil structure, excludes telecommunication tower, pipeline outside the factory. So pipeline outside the factory, telecom tower and land and building or any civil structure will never be a plant and machinery. So you can't take ITC on the same. So if you have taken works contract for the same, works contract service, and you have paid GST, that is not allowed as ITC because it's blocked. Understanding? So this will be considered to be an immovable property, not plant and machinery. Now, let's look at what are the other blocked credit we have. Section 17(5)(e). Inward supply for which tax is paid under Section 10. That is composition levy scheme or concessional scheme. What do you mean by Section 10? A question to you on that. Say a registered person has opted for section 10, means they are under compensation levy scheme, and they make an inward supply. Are they eligible to take ITC? I'm a person who opted for compensation levy scheme. Can I take ITC on inward supply? No, because as a condition for taking ITC, as a condition for taking compensation levy scheme, it says that the moment you opt compensation levy scheme, you have a very small rate, like 1% for a manufacturer, 1% on taxable turnover for a trader, and 5% for restaurants. If you are opting 10 to a special scheme for services, up to 50 lakhs turnover kind of a scheme, 6% will be your tax rate. So you're having a very small tax rate. Thereby, the condition is that when you're making purchases, whatever GST you paid, you're not allowed to take any ITC. So if you are under compensation levy scheme on your inward supply, no ITC. Now your outward supply, can you collect these 1%, 5%, 6% from the customer? No. Now the condition says that the person opted for section 10 is not allowed to collect tax on supply from the recipient. They cannot. So they are paying from their pocket. Now my question is very important. Can my customer, I have paid 1% when I sold to my customer. Say I sold product worth 50,000. I paid 500 rupees as GST from my pocket. I did not get it from my customer. Now can my customer claim ITC of this 500 rupees? Can the customer claim ITC of this 500 rupees, which I paid? So the composition person paid 1% from his pocket. The customer did not pay him, so he paid from his pocket. Customer, can he take the credit of this tax paid under compensation levy scheme? No. So which means you have to think like this. If a person opt for compensation levy scheme, he cannot claim ITC on his inward supply. He cannot pass on the credit of the 1%, 5% taxes to his customer also. Are you guys understanding this? So if you look at the example here, he can't take ITC. His customer can take credit of that 1% taxes paid by this composition person also. So what is the block to credit provision says? Says inward supply for which tax paid under section 10 means I purchased from a composition person. I did not pay taxes. He paid from his pocket. That is not allowed as credit for me. Now, section 17(5)(f) inward supply by NRTP. Who's an NRTP? Who's an NRTP? Is a non-resident taxable person. What is speciality for non-resident taxable person? Is he a resident? He is not a resident. Is he coming to India for doing permanent business or occasional business? He is coming here to do an occasional business. Yes. So he's doing occasional business. So practically, what is the benefit that he gets if he opt for NRTP registration? His registration will come with an expiry. Okay. So what kind of people will opt for this NRTP registration? People who are coming for exhibitions. Say somebody coming from Dubai to India to participate in Delhi Auto Exhibition. Okay, from Dubai, somebody is coming to participate in Delhi Auto Expo, and they want to sell cars in India. They want to import and sell cars in India, and this exhibition is only for 5 days. If they take normal registration, they'll have to do all the compliances forever till they cancel. But if they take an RTP registration, it comes with an expiry. So they can take this registration up to 5 days only. After 5 days, automatically this registration expires. Now, if they want to take registration for 30 days, can they take? Yes. They want to take this registration for 80 days. Can they take? They want to take this NRTP registration for 100 days. Can they do it? Can they take NRTP registration for 100 days? No. No, because NRTP registration can be taken only for a period up to 90 days. Okay. After taking the registration, they can extend it for another period up to 90 days. So NRTP registration is valid only for a period up to 90 days, or the time that you are asking should be less than 90. This is the understanding. Now, The second understanding that you need to have, what is the special block to credit provision these NRTPs will have? Say, I'm Sheikh Manzoor. Okay, I'm Sheikh Manzoor, and I have a car dealership in Dubai, and I'm coming to Delhi to sell cars. So government is saying that if you are taking an NRTP registration, so Sheikh Manzoor has taken NRTP registration, non-resident taxable person registration for 5 days only for that exhibition. They're saying whatever you import and sell, no problem. So Sheikh Mansoor is importing 5 cars to sell in India in that exhibition. Whatever, when you're importing, what are the taxes that will be coming? Okay, so an NRTP is going for Auto Expo. Is from UAE, 5 days. Imported 5 cars. What are the taxes that will be applicable when you're importing? You will have to pay customs duty, plus you'll have to pay IGST. Now this customs duty, can you take it as credit? IGST, can you take it as credit? Yes, IGST is allowed as credit. Now, after selling these 5 cars, he made an inward supply of 2 more cars. Not import. Not import. It is domestic purchase from Delhi itself. And he had paid GST. Is this GST allowed as ITC? No. Government is saying that, see, an NRTP, you are supposed to import and sell. If you make domestic purchase and sell, then the domestic purchases, I will not give you any ITC. Get the provision here. Section 17.5F. Section 17.5F. What it says? Inward supply by NRTP. Inward supply by NRTP. ITC on domestic inward supply is blocked, but IGST paid on import, ITC will be allowed for you. This is understanding. Is it clear? Can I have a quick yes from everyone on the chat box? Okay. Now, section 17.5G. What is that? Section 17.5G says inward supply for personal consumption is also a block to credit. We are making inward supply, and that's for personal consumption, not for business. It's a block to credit. Then, section 17.5H. This is also tested a couple of times. Inward supply for goods which are lost, stolen, destroyed, written off, disposed of by way of gift or free sample. Means what? What are the words used? Lost, stolen, destroyed, written off, disposed of by way of gift or free sample. They're saying, suppose you're a manufacturer. You made inward supply of raw material and your outward supply of finished goods. What happened to this finished goods? This is lost, stolen. You write it off, gave it as gift, or you gave it as sample. When you're giving it as gift, sample, writing off, gift, stolen, destroyed, will you pay GST on all of this? No, because there is no consideration. No GST is paid. Correspondingly, on your purchases, are you eligible for ITC? No, because section 17(5)(h) is blocking that credit. Otherwise, people will misuse. No, they wanted to purchase it for their house. They'll purchase it in their business, take credit, and say that it is lost, stolen by somebody. A raccoon came and then stole it. So they will say all these stories. So government said no. If your outward supplies were they're not getting any credits, then why would I give you ITC on your purchases? As simple as that. But one important point that you need to understand here: goods lost and process loss are two different things. If so, there's a very good question from Abel. Abel is asking, what if after taking ITC goods are lost? Generally, it will be like that, right? You take the ITC, then only your final goods are there. What do you have to do? You're not allowed to take ITC. You have already taken ITC. What do you do? What will you do? Now reverse this ITC, which means in subsequently you will pay this back to the government. You will treat it as a liability paid to the government. So you have to reverse the credits. Now, goods lost and process loss are different. What do you mean by goods lost? Let's try to understand what you mean by goods lost. Say, I have put in a process, in a factory, in a process, I have put 1000 kg of raw material. Okay, I'm putting in, you look at the screen and then try to make a grasp of things. 1000 kg I'm putting in a process. And after the process, I'm getting how much kg of product available? The finished goods is only 950 kg. 50 kg is gone in the process, which we call it as normal loss. Should I reverse ITC on the normal loss that I have had on this 50 kg? Should I go ahead and then reverse ITC? The answer is no. You don't need to reverse ITC on this 50 kg because it's not goods lost. It is consumed. It's part of the process. You're using in the process. Okay, no need to reverse. Now, once what happened is you put 1000 kg, you got only 920 kg out. Out of that, so the loss is now 80 kg. Out of that, you told 50 kg will be treated as normal loss and 30 kg will be treated as abnormal loss. 50 kg is normal loss, 30 kg is abnormal loss. Now, my question is this abnormal loss of 30 kg, should I reverse the ITC on that? 50 kg of normal loss, no problem. 30 kg of abnormal loss, should I reverse ITC? Not at all. See, this normal laws, abnormal laws, all of these are creation of concepts for the purpose of costing. Okay. All of these are part and parcel of business. Once you use it in the business, if you have lost it in the process, it is not treated as a block to credit at all. You can take ITC. No need to reverse any ITC on normal loss or abnormal loss. But you kept the product outside and then you had some natural calamity like fire accident in the fair house and you lost 1000 kg. That's not a process loss. That's goods lost. There you will have to reverse the ITC. Are you guys understanding? So goods lost is not same as process loss. Process loss, no reversal required. Goods lost, reversal is required. Now, the last credit which talks about tax paid under section 74, 129, 130, which all we can understand by saying tax paid after finding out tax evasion. Okay. Suppose, okay. I am sending product to, okay, I'm a furniture dealer. And suppose our friend Shruti is purchasing furniture from my shop. I'm a furniture dealer. Shruti is purchasing furniture from my shop. Now, Shruti has, called me up and said, "Hello, are you going to provide us GST bill?" If you want, I can give you. If you don't want, I can give you without GST. So, if you want GST bill, I'll charge you some, 20,000 extra. So, Shruti says, no problem. Without GST is okay. Now, the lorry is coming with goods without GST. Now, somebody stops the lorry, the officer. Officer checks this product and finds out that the product that is being transported now does not have GST. There's no e-way bill. There's no GST on the same. So in such cases, what will happen to, so if there is no GST on the same, so what will happen to, see what will happen to the officer? Officer, what will he do? He'll say that immediately you'll have to pay GST. So I paid GST immediately because there are provisions in 129, 130 says if I don't pay after being caught, they can confiscate my product, confiscate even the vehicle. They can arrest the vehicle and then take it. So I don't want that, all that. So I paid immediately the GST to the officer. Now I called up Shruti and I said, Shruti, now, now I have paid taxes. Why don't you start taking credit? Now that the officer is caught, I paid the taxes. Now you take the credit. Can Shruti take the credit of such taxes paid after finding out tax evasion? Then what is the whole purpose of government taking all the effort? Government said no, no, no. Whatever penal fraud cases you have, where I find out that you did not pay taxes and I collect taxes later, your CPN cannot take ITC on that. Those are blocked. So whatever tax paid under section 74, 129, 130, all those are blocked credits. Are you guys understanding this? Is it clear? Everyone, is it clear? So this is the concept of blocked credit. Let's quickly look at few questions. Okay, look at this question. Okay, look at this question. Harshkeet Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information pertaining to purchases made or services availed by it during the month of July. See, for those people who are attending for the first time, probably for their help, this questions, whatever I'm showing on the screen, I've already shared that PDFs with you. So you can refer that at your end later. So right now, I want you to look at the screen only and read it, have full concentration, read it on the screen itself. Harshgeet Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information pertaining to purchases made or services availed by it during the month of July. Raw material to be received in the month of September, 2,50,000. Can they take the ITC on this GST paid on raw material to be received in September? Which month are we computing now? For July. Can I take ITC? No. Why? Condition under section 16 subsection 2. Okay, to be precise, clause B says that goods or service to be received. For this raw material, in which month I can take ITC? Only in September. So this is not allowed. Membership of a club availed by employees working in the factory. Can I take ITC of that? No. Membership in a club is a block to credit. Section 17(5)(b). The block to credit. Inputs to be received in 5 lots, out of which third lot is received during the month. Only 3 is received. The goods are received in lots. When can I take the credit? Only upon receipt of last lot. So that is also not allowed. Truck is used for transport of raw material. Can I take ITC? Yes, because it's for transportation of goods. I can take ITC. Then, capital goods, out of 3 items, 2 items invoice is missing. GST on those items is 80,000. So, out of 1,50,000, there are 3 items. Out of the 2 items, invoice is missing. How much I can take ITC? Only 1 item. So, I can take ITC of 70,000. So, what is my total ITC available? 1,10,000 is what I can take. So, I have to write working notes on all of this. This is how you will solve this particular question. Look at this question 29. Very similar questions, guys. So this is how the questions are generally coming in. Dina Limited, a registered supplier from Maharashtra, is engaged in manufacture of passenger autos. The company provides the following details of purchases made or services availed by it during the month of March. Purchase of iron, which is used as a raw material. Goods were received in two installments, first in March, second in April. 2,50,000. Which month am I computing? March. So in two installment is coming. One is came in March, another one is going to come in April. When can I take the credit? Only in April. So that 2,50,000 is not allowed as credit. Then purchases of accessories which are delivered directly to the dealer of the company on the direction of Dina. An invoice was received by Dina. A third party received on behalf of me. Is it enough for me to take the credit? Yes, we have discussed this with LP's example, if you remember. Then, purchase of bus seating capacity is 15 for transportation of employees from their residence and company and back. Can they take the credit? Yes, because up to 13, so up to 13 including driver is what is blocked. General insurance taken on car used by executive for the company for official purpose. General insurance on the car used by executives. Can they take the ITC? No. General insurance on vehicle for which ITC is blocked is a blocked credit. So section 17(5) AB is the correct section. Yes, correct. That is a vehicle is blocked, so I cannot take. So only these two are allowed as credit. Look at question number 40. Sinon Private Limited Agra is registered supplier engaged in manufacture of taxable goods. Goods valued at 10,50,000 was supplied by the company to Freshbite Private Limited, a registered supplier located in Firozabad, without the cover of an invoice with fraudulent intent. Since the company evaded taxes by not issuing invoice for the supply, a show cause notice was issued by proper officer under section 74 requiring the company to pay tax at 12%. An applicable interest and penalty. The company, so which section the notice was given? Under section 74. The company paid interest, tax, interest and penalty after the order was passed by the proper officer. Examine ITC entitlement of Freshbite Private Limited in respect of tax of 1,26,000 paid by Xenon Private Limited. Question is this: Can this company, the recipient, take the credit of taxes paid under section 74? No, it is a block to credit under section 17(5)(I). That block to credit. Tax paid under section 74, 129, 130. We've discussed that just now. Okay. Now, next question. Flamingo Limited is an airline providing passenger transportation services by air. The company offers meals of premium quality to passengers on board the aircraft. The value of such meals is compulsorily included in the price of the air ticket. The company avails outdoor catering services of Dhaniram Private Limited for providing such meals to its customers. Examine whether Flamingo Limited can avail ITC on such outdoor catering services availed by it. Can they? Yes, because they are taking inward supply of outdoor catering to provide outward supply of composite supply, which includes this food as well. Yeah, so it is for further supply of the same or as a part of composite supply. Guys with me? Okay, so it's an exception to the block to credit. The airline company taking outdoor catering to make meals for their customers can take ITC. Yeah, so this is an exception. Uh, Sudhi has asked earlier whether we need to code sections, is it? Okay, so I'll make an interesting note on that. So suppose the section 41 came in for your examination, and your answer is section 17 subsection 5 clause B. You've only written this. How many marks you would get? You have not written any other answer. You just written the section number. You get nothing. But instead, you have written all the answers correctly, and you have quoted section 17 6B. Instead of 5B, you have quoted section 17 6B. You've written all the answers correct, but you have quoted section 17 6B. Would you lose marks? Everything is correct except the section number. There's a chance that you will lose marks. So you quote the section only when you are not all the marks. You will lose some marks because you have quoted the wrong section number. Not all the marks. Okay, that is too harsh for the valuer to do. They'll not do like that. Now, you will quote the section only when you're 100% sure. Also, you don't have to go close by close. If you quote section 17, great. Even if you don't quote section 17, you can write like this. As per relevant provisions of the GST Act 2017 and rules thereof. You want to quote a section, you write like that. Okay. So only thing that you get if you write the section number correctly is that you will impress the valuer. Okay. So if you're very confident on a section number, you write it, you will impress him definitely. Otherwise, just don't even bother to write. Just write that as per the relevant provisions of CGST Act, this is how the provision is. Enough. They're not going to be very adamant on whether the student writes a section number correctly. So if you're writing supply, for example, you just have to write section 7. That's it. Any provisions from supply, you write section 7. Great. Any provisions that you get from composition levy scheme, you write section 10. Enough. Anything that you come from valuation, you write section 15. Enough. Anything for condition, you write section 16. Anything you come on apportionment or blocked credit, you write section 17 or 17.5. Enough. Am I answering it? Shruti and Leo? I hope I've clarified both of you. Okay. Now, question number 42. With a reference to the provisions of section 17, examine availability of ITC in following independent cases. MBF Limited, an automobile company, has availed works contract service for construction of foundation on which a machinery to be used in production process is to be mounted permanently. Can I take ITC? Yes, because it is for construction of plant and machinery. I can take ITC on that. Correct. Then, Shaw and Constructions procured cement, paint, iron rods, and service of an architect and interior designer for construction of commercial complex for one of its clients. Shaw and Construction is a construction company. They made a lot of purchases to construct a building for someone. Can they take ITC? Yes, a construction company can take ITC. It's their inward supply. So both of them are exceptions. Third one, ABC Limited availed maintenance and repair services from Jaggi Motors for a truck used for transportation of its finished goods. Third one, ABC taken maintenance and repair from Jaggi Motors for truck used for transportation of finished goods. Can they take ITC? Yes, they can take ITC because the truck, when you purchase, you can take ITC. For those motor vehicle, when you purchase, you get ITC. For general insurance, repair and maintenance and servicing, you will get ITC. Understanding? Now, I'll quickly run you through another provision before I move to registration. Simple, straightforward understanding. Say, Mr. Raju, Mr. Raju commenced his business. So he's unregistered at that time, right? When should a person take registration? Only when his threshold limit exceeds, sorry, when his agreed turnover exceeds the threshold limit. Only then we will go for registration. So his threshold limit is say 20 lakhs or 40 lakhs. Till then he is unregistered. So he started his business, he's doing business. Will he be paying GST as and when he's doing this business, or he'll pay GST only after he's registered? He'll pay only after he's registered. So currently he's unregistered. So during the period when he's unregistered, he's purchasing a lot of stock to sell. Can he take ITC when he's unregistered? Can an unregistered person take ITC? Can an unregistered person take ITC? The answer is no. An unregistered person cannot take ITC. So an unregistered person, if he cannot take ITC, an unregistered person cannot take ITC. Okay, so it's very, very straightforward and simple. No, an unregistered person cannot take ITC. So what happens is, on 31st December 2022, if you look at 31st December 2022, his turnover exceeded the limit. So he is now taken registration. So he had purchased during the time he was unregistered around 10,000 kg of raw material. Out of that, around 2,000 kg still available in stock on 31st December. Now he's going to sell this particular stock later, which means he's going to sell the stock after 31st December when he's registered. So I had purchased the stock when I was unregistered. I did not take ITC. Now when I'm selling this, I'm registered. I have to pay taxes. So if I don't get ITC and while selling, I'm paying taxes, which means it'll create double taxation. No, are you understanding the logic? So while purchasing no ITC, while selling GST is payable, which is not fair. So government said, don't worry. When a person who's unregistered is now taking registration, whatever stock is left on the last day in which he is taking registration, he can take the credit on those stock as an opening credit and then start selling the product with GST. So whatever is lying on stock, he can take ITC. But this facility is not available for the machinery that he is purchased during the time he is unregistered. Only for stock it is available. Now this is one scenario. Second scenario is, suppose all the scenario that I'm talking about is switching from one period to another period. Now second scenario I'm talking about Gopal. Gopal is registered, but he has opted for composition levy scheme. When he's opted for composition levy scheme, on his outward supply, he'll pay 1% GST. Similarly, on his inward supply, he cannot take any ITC. That's a condition that we have discussed. That's a condition. So during the time he's in composition levy scheme, he purchased a lot of stock. He did not take ITC because he's under composition. Now, next year, he moved out of composition. But still, some stock on which he did not take ITC is still there. Now, the next year when he's selling, he'll pay tax on the normal rate, 18%, 28%. But ITC is not allowed. So there also government said, whatever is the stock is available on the last day when he's under composition levy scheme, now you take ITC and then start selling it. But here, an important change is that, suppose while you are under composition levy scheme, you had purchased a machinery. So you purchased a machinery on 1st October 2021 and you paid GST of 1 lakh. My question is, are you a registered person at the time you're purchasing the machinery? Yes, you are a registered person while you're purchasing the machinery. Okay. Now, since you are a registered person while the time when you're purchasing the machinery, the understanding that you have to have, or the understanding that you need to get here is, you are eligible to take ITC on the machinery also. If you still continue to use the machinery after composition levy scheme, you can take ITC on the machinery. But for every quarter that you have used, you reduce 5% of the ITC. Balance ITC you can take at the time you are moving. So only when a capital good is purchased, when you are unregistered and you're using after your registration, you're not allowed to take ITC. If you are a registered person purchasing capital goods and still using at the time you are moving out of composition scheme, you are allowed to take ITC. Similarly, the third scenario in similar understanding is, you're a registered person, but your product, you have having two product X and product Y. Product X is exempted from GST. Product Y is taxable. And you have purchased raw material for product X, which is exempted. You don't take any ITC because tax is not payable. Similarly, you purchased a machinery which is used for product X only. You're not taking any ITC. Now, after some time, what if the product X exemption is withdrawn? Now, product X is taxable. And you still have certain raw material purchased, you did not take ITC. Now you can take ITC. Similarly, for the machinery also you can take ITC. Okay. This is a very basic understanding that you need to have. This provision is mentioned therein the notes. I'll just quickly run you through that provision for your understanding. Cases where ITC on the stock and the capital goods can now be availed. First three scenario. Number one, an unregistered person obtaining registration. Second, a composition levy scheme person switching to normal scheme. Third, a registered person's exempt supply. Registered person's exempt supply becoming taxable supply. What you have to note here in that, in case 2, in case 2 and 3, in case 2 and 3, what you have to understand is, even on capital goods, you can take ITC after reducing 5% for every part, or every quarter or part. Okay, you can take ITC. Now, opposite scenario, think opposite scenario. A registered person cancelling his registration. Normal person opting composition levy scheme. A taxable supply becoming exempt supply. You'll have to reverse ITC. So, what I want you to do is, please ensure that you go through these notes and the question from the question bank. I've given you the full question bank also. Please ensure that you do it. Now, with that, we will move to registration chapter. We will quickly have an understanding on this registration chapter. Can he take, so there's a question from Mohammed. Can he take ITC if he registers after 30 days? I did not understand that. All those ITCs, it's your effective date of registration is not relevant here. We are only talking about whatever purchases you made before your effective date. Whatever purchases you made before your effective date. Okay, so even if you're registered after 30 days or before 30 days, whenever you make application, that's relevant only for effective date. Now, whatever purchases you made before effective date, if you are still having that in stock, that is what we are talking about in section 18. Yeah. Now, what are the things that you have for you to learn in registration chapter? Section 22 to section 30. Section 22, 23, 24, we can learn together. It's very simple, straightforward. Person liable for registration, not liable for registration, compulsory registration. Person liable for registration. Okay, so section 22 talks about threshold based registration. We call it as threshold based registration. Now, for you to understand threshold based registration, you need to first look at this chart. Whether everybody will get. Okay, so please focus here and then try to understand this. If you're not understanding registration chapter, believe me, this is a chapter that you can understand in 1 hour, no problem at all. So if you're deciding in India, there are lots of people who are doing business. Whether everybody in India is liable to take registration, the answer is no. So how do you check whether a person needs to register or not in India? Simple, straightforward checking. whether everybody who's doing business in India can enjoy threshold limit? That's the first question. Can everybody doing business in India enjoy threshold limit? They only need to register after their turnover exceeds the threshold limit? No. Not everybody gets section 22. They said, or to check whether somebody gets the benefit of section 22 or not, you will have to look at, are they making intrastate supply or are they making interstate supply? So if they are making intrastate supply, only intrastate supply. Say I'm a dealer of mobile phone, I'm only making supply within the state. Then section 22 is applicable, which means I can go ahead and then register only when my aggregate turnover, the term that we are using here is aggregate turnover, and the aggregate turnover exceeds the threshold limit. That's only when you will go and register. But if you're also making interstate supply, so from, say, suppose from Chennai, I'm making supply to Bangalore and Kochi and Calicut. If that's the case, if I'm making supply from Kochi to Bangalore and Calicut and all that, it means you have to go ahead and then take registration depending upon what kind of supplier you are. Okay, I cannot say immediately compulsory because I'm making interstate supply also. Then I'll have to ask, are you making interstate supply of service? You're a service provider. Then no worries, threshold limit is still applicable for you by using a notification. But if you are supplier of goods and you make interstate, I'm supplier of mobile phone from Chennai, I make supply. My turnover is not a lot, it's only like 5 lakhs, but I made supply to Bangalore and Kochi. Means I'm making interstate supply. Then I have to ask the question, are you making interstate supply of handicraft goods? If it is handicraft goods you're making interstate supply, again you'll get threshold limit. So only in goods, only handicraft goods will get threshold limit. If you remember one of the examination, they've said they are supplying goods wherein 70% is machinery and 30% is manual. Is it handicraft goods? 70% machinery and 30% manual. Is it handicraft goods? No, it's not handicraft goods. If it's not handicraft goods and you make interstate supply, then what registration will be applicable to you? Compulsory registration, which means compulsory registration. It means what? You have to take registration irrespective of your threshold limit. Okay. So irrespective of your turnover, you will have to go and take registration. That's what is section 24 is. Now, what is the threshold limit that is applicable? What is the threshold limit that is applicable? Section 22 says, yeah, manual labor means handicraft. The question that they were trying to intend us, it is handicraft. They said handicraft can have some use of machines also. They have mentioned in that notification, but that does not mean 70% is machine and 30% is handicraft. That's not called as handicraft. Now, section 22 says your registration is required only when your aggregate turnover is an all India turnover for all the branches. If you are only when your aggregate turnover exceeds the threshold limit, that's only when you will register. But the threshold limit is not same for all the states. For that purpose, we have classifying the states into 3 categories. Okay, this is for our understanding. In examination, I'll tell you how you can write these answers. General category, special category medium, and special category small. First, let's look at special category small. To understand which are the states comes under special category small, I have a code word for you. TNM2. Can we expand these states which are TNM2? T stands for Tripura. N stands for Nagaland. M stands for Mizoram and Manipur. There are 2 M. So Tripura, Nagaland, Mizoram, Manipur. If you come under any of these states, you have to take registration if your threshold limit exceeds, your aggregate turnover exceeds the threshold limit of 10 lakh itself. Now we have the second category, medium category. wherein the limit is 20 lakhs for all the supplies of goods and service. What is the code word for those states? Saptam with a U, Saptam. Can we expand Saptam also? S stands for? You think about the northeast ones mostly. Sikkim. A for Arunachal Pradesh. P for the Union Territory. Pondicherry. Let's put the cherry. P for the new latest state that has been added. Telangana. U for Uttarakhand. Your Rishikesh, all that places, Uttarakhand. Then M stands for the M that is left out in northeast, which is Meghalaya. Meghalaya comes under medium category. So all of these states comes under 20 lakhs limit. Now all other states, including Kerala, Tamil Nadu, Karnataka, Goa, Delhi, everywhere, it will be coming under general category. But in all other states also, not everybody has the same limit. So if you are in Kerala and if you are a supplier of service, or if you are supplier of goods and service, your limit would be 20 lakhs. And if you are supplier of goods, but there are certain goods they have specified called as PTI, pan masala, tobacco, ice cream. Now there's an amendment here. They have said that I am adding few additional goods. I've listed down those additional goods here. If you want, you can make a note of those. Fly ash bricks, or you can just think about bricks and blocks. Fly ash bricks. Fly ash means in Malayalam, it's charam, like the ashes. They are very strong bricks. If you make bricks out of ashes, it's very strong, used in all those bigger constructions. Or fly ash blocks on a fly ash aggregate, the mix where 90% or more fly ash is there. Or bricks of fossil meals like laterite rocks, okay, the black rocks. The building bricks, the cement bricks, or the clay bricks, the earthen roofing tiles, the roofing tiles. Okay. So all of this, if you are supplying, including PTI. Apart from PTI, now they have added four more different categories of product and said, if you're supplying PTI or of these bricks and blocks, hollow bricks is also included in building bricks. So if you're supplying all those, then your limit for registration is not 40 lakhs, it is 20 lakhs. Are you guys with me? Second one is bricks of fossil meals. Fossil meals bricks means the bricks that you can cut from the earth and then take. Okay, fossil meals is the one which is creating all these bricks. You go to Rajasthan, you have a different kind of bricks used for construction. There is different bricks available. But if you come to Kerala, you have this red color bricks that can be taken from the earth. Okay, so we call it laterite. Okay. And building bricks can be, there are certain bricks that we will make manually, like we call it ishtiga in here, the small, which will be, used, we'll use furnace to make certain clay bricks. Okay, those are called as building bricks. So all of this. So for you, it's easy to remember. They're not going to ask you a question wherein they'll give you some other blocks which are not included in this list. So anything you hear about bricks and blocks or building blocks and stuff like that, you say 20 lakhs is the limit even in general category states. Except PTI and these bricks and blocks and roofing tiles. All other goods in general category states, your registration limit is 40 lakhs. Now let's quickly go and read what do you mean by aggregate turnover. Aggregate turnover is a turnover on all India basis for a single PAN. Then if a person has more than one branches, one in a lower limit state, other one in a higher limit state, lower limit should be applicable. And if a person wants, he can take voluntary registration. These are the three notes that we have. Now let me quickly run you through the questions. Examine whether the supplier is liable to get registered in the following independent cases. Number one, Raghav of Assam is exclusively engaged in intrastate taxable supply of ready-made garments. His turnover in the current financial year from Assam is 28 lakhs, and another showroom in Tripura, the turnover is 11 lakhs in the current financial year. So my first question to you would be this: what is his aggregate turnover? 39 lakhs. What is the limit that will be applicable to Raghav? Assam is in general category. Tripura is in TNM2, which means he has in Assam the limit is 40 lakhs and Tripura the limit is 10 lakh. So which limit should I apply? 10 lakh. If it is having more than one branches and in one higher limit, another lower limit, I'll apply lower limit. Then, so his turnover is 39 lakhs, his limit is 10 lakhs. Should he register? Yes. Second, Pulkit of Panjim, Goa is exclusively engaged in intrastate taxable supply of shoes. His aggregate turnover is 22 lakhs. Goa is under which category? General category. What shoes is under PTI and building blocks and all that? No. So what is the limit applicable? 40 lakhs. What is the turnover he has? 22 lakhs. Should he register? No. Good. Then third question, Harshit of Himachal Pradesh is exclusively engaged in intrastate supply of pan masala. His aggregate turnover in the current financial year is 24 lakhs. Himachal Pradesh is in general category, but pan masala will come under 20 lakhs. So his turnover is 24 lakhs. Should he register? Yes, he has to register. Fourth question, Ankit of Assam is exclusively engaged in intrastate supply of taxable service. His aggregate turnover in the current financial year is 25 lakhs. Services. Assam is in general category. For services, what's the limit? 20 lakhs again. Should he register? Yes, the turnover is 25 lakhs. Sanchit of Assam is engaged in supply of both taxable goods and service. In Assam is general category, but if it is goods and service, what's the limit applicable? 20 lakhs. So the turnover is 30 lakhs. Should he register? Yes. Now let's look at compulsory registration. Who are the people who are liable to take compulsory registration? First one is person making interstate taxable supply. What do you mean by compulsory registration? Irrespective of the turnover, certain people have to mandatorily go and take registration. So the first set of person is a person making interstate supply. But in that there are a few exceptions that we have. One we have already seen. In case of service, even if they are making interstate supply, threshold limit is applicable. In case of handicraft goods, including casual taxable person making handicraft goods, they don't need to take compulsory registration. Okay, so handicraft goods always gets compulsory registration. Similarly, sorry, handicraft goods always get threshold. Similarly, service also always service. Wherever you see service, threshold limit is applicable. Okay. Then, a person required to pay tax under reverse charge mechanism. Say, what does that mean? Suppose I start a new company called Bootcamp Private Limited. Okay, my turnover is zero. Should I check GST registration? Only intrastate, or I'm doing service. Turnover is zero. No. Now I appoint Mr. Raju as independent director, and I'm paying Mr. Raju something called a sitting fees. paying Raju sitting fee of 1 lakh. Is this sitting fee of 1 lakh taxable? It is taxable. So when I pay an independent director or any director, I'm paying something outside salary, like sitting fee, it is taxable. And who's liable to pay taxes? Raju is the supplier here. Bootcamp is the recipient. Who's liable? Bootcamp is liable because it's taxable under reverse charge mechanism. Now, Bootcamp has to pay 18,000 GST under RCM. But what is that Bootcamp is saying? Their contention is, see, my turnover is only nothing. My turnover is zero. Why would I register and pay taxes under RCM? Can I say like that? No. Section 24 is applicable. You will have to go and take compulsory registration. You guys with me? Is it clear, everybody? Can I have a quick yes if this is clear? Then casual taxable person, non-resident taxable persons, these people have to take, again, casual taxable person is also similar concept. They're taking a temporary registration within India. So these people, CTP, NRTP, wherever they come for an exhibition and they take a registration, they'll have to take mandatory registration, cannot look at turnover. Then every e-commerce operator, in case of e-commerce operator, every e-commerce operator liable for TCS under section 52 has to take compulsory registration. Then person who's supplying goods, now service is not there, only goods. Person supplying goods through such e-commerce operator liable for TCS also has to take mandatory registration because service again threshold limit they'll get. Then e-commerce operator under section 9(5), example Uber, those also will come under for registration. E-commerce operator 9(5) also comes under compulsory registration. Then person liable for TDS will have to take compulsory registration, like government. They're liable for paying TDS. They can't look at the turnover. If you want to distribute your credits, input service distributor, you have to take registration. If you're an para 3 agent and you have to take mandatory registration. Then an online automated service provider from outside India, like say for example, Netflix is providing services directly from outside India to India. So they'll have to take mandatory registration. That in case of services, it's a notification which says that. See, I've already given it here. Supplier of service making supply through e-commerce operator can also avail the benefits of threshold limit. It's there. But I have not taken that in here. That's why I'm putting it that service. You should understand always. Just keep it in your mind. Service always threshold limit. Okay. Now, what is that section 23 talks about? Person not liable for registration. Who are these people not liable for registration? It's easy to look at. First, we will read it. We'll try to get an understanding. First, person engaged exclusively in the business of supply of goods and or service not liable to tax or exempt from GST. What it says. Person engaged exclusively in the business of supply of goods and or service not liable to tax or exempt from GST. Then, individual or HU of agriculturist to the extent of supply of produce out of cultivation of land. Then some specified category I've mentioned there. A person making outward supply which are fully taxed under RCM. Let's look at the first one. Say I'm running a petrol pump. I don't have any taxable supply because petrol, diesel, all those things are non-taxable supply. My turnover is 10 crore. Is there any point in me taking registration? I'm only supplying petrol, diesel. Is there any point in me taking registration? No, because I'm not paying GST at all. So, person engaged exclusively in the business of supply of goods and or service not liable to taxes exempt from GST. Then, I'm supplying fresh vegetables which are exempted. Only that. 20 crore turnover. No need to register. Now, they have said individual or HU of agriculturist. They don't include companies there. Only an individual HU of agriculturist. Whatever produce you are making out of cultivation of land, those are exempt. Okay. So you don't have to go ahead and then take a registration for that. Then third one, a person making outward supply which are fully taxed under RCM, which means I'm the supplier. Whatever supply I make, my customer will pay taxes directly. Then why would I take registration? Standard example would be a lawyer. I'm an advocate. When I provide services to an individual, it is exempted. No tax itself is applicable. I provided services to a company. The company will pay taxes directly. Say, I paid 40 lakh worth services to an individual, 60 lakh to Reliance. Now that 40 lakhs is exempt. 60 lakhs is taxable, but the tax is paid by Reliance directly under RCM. So my turnover is 1 crore. But in both of these cases, I don't have to pay taxes. Because the first case, it is exempt. Second case, it is paid by Reliance directly. So should this advocate go and take registration here? His turnover exceeds 20 lakhs. Should he go and take registration? No. Reason? Why he is not required? Because he is a person whose outward supplies which are fully taxed under RCM. My customer pays full taxes directly to the government. Then why should I go take registration? Because I'm not having any taxes to be paid. Very simple, straightforward. Okay, now let's look at a few procedures and then try to understand what is relevant. Procedures and deemed registration. Every person liable to pay registration under section 22-24 in every state or union territory needs to obtain registration within 30 days from the date on which he becomes liable for registration. Every person liable to take registration under section 22 or 24 in every state, they have to obtain registration within how many days? Within 30 days. Now, you have to make application within 30 days. Reason, the effective date of registration will be based on that. Now, let's see how effective date would be working. So the question is, to understand the effective date, the question is like this: whether application for registration is made within 30 days from the date on which he becomes liable. Say, today my turnover exceeded 40 lakhs in Kerala. I am supposed to take registration. So within how many days I should make application? Within 30 days. If I make application within 30 days, my effective date would be today, the date on which he becomes liable for registration. If I don't make application within 30 days, my effective date would be the date on which I got the certificate of registration, which means I'm not registered during this period wherein I'm supposed to be registered. So the penal provisions can apply. Look at the question. Question 45. Determine effective date of registration in following cases. The aggregate turnover of Dhampur Footwear Industries in Delhi has exceeded the applicable threshold limit of 40 lakhs on 1st September. It submits the application for registration on 20th of September. Registration certificate is given on 25th September. Dhampur Footwear, Delhi. Delhi is in which category? General category. For footwear, what is the limit that will be applicable? 40 lakhs. When did they exceeded the 40 lakhs limit? On 1st September. Within how many days they have to apply? 30 days. So 1st September means in September 29 days. So before 1st October they should have applied. When did they apply? 28th September. So did they apply within 30 days? Yes. So what will be the effective date? The date on which they are liable for registration, that is 1st September itself, not certificate date. So they will be considered effectively registered from 1st September onwards. Okay. Now, question 45B. Mehta Teleservices is an architect in Lucknow. Its aggregate turnover exceeds 20 lakh on 25th October. It submits the application for registration on 27th November. Registration certificate is granted to it on 5th December. Now, my first question is this. Architect, a service provider in Lucknow, Uttar Pradesh, what will be the threshold limit applicable for them? 20 lakhs. When did it exceed 20 lakhs? 25th October. Within how many days they should have made the application? Within 30 days. So October 6 days, November 24 days. They should have made before 24th November. When did they make? 27th. Is it within 30 days? No. So what will be the effective date? Date on which they have got the certificate. So what will be the effective date? Only 5th of December. Understanding? Now let's look at section 27 and then try to understand this quickly. What are the special provisions I have for CTP and NRTP? Now let's try to look at the definition of CTP and NRTP. What is CTP? Casual taxable person. I'll ask you questions, so you can answer those questions. So your answer will be your understanding will be very simple. Casual taxable person. Whether this casual taxable person will have is he a resident? Yes, he's a resident. So is it likely that he will have a PAN or he will not have a PAN? Likely to have a PAN. Okay, so he will have a PAN. So next thing, so he's somebody who is in he's a resident who's in India. He's likely to have a PAN. Second, is he doing business somewhere in India? Is he doing business somewhere in India? Yes. So he's doing somewhere in India. Now he's going to this a new state where he's having fixed place or he's having temporary place. He's going to the new state where he's having fixed place or temporary place. He's going to a new state with a temporary place. So in the new state, is he planning to do permanent business or occasional business? So suppose he's somebody who's in Rajasthan. Now he's coming to Tamil Nadu to do temporary business, which means he's coming to Tamil Nadu to do occasional business. Then he will be called as casual taxable person. Now read the definition, you will understand it. A person who occasionally undertakes transaction involving supply in the course of furtherance of business, which means he's doing business somewhere in India. Now he's doing occasionally undertaking transaction involving supply in a new state or a union territory where he has no fixed place of business. Read it once again. A person who occasionally undertakes transaction involving supply in the course of furtherance of business in a state or union territory where he has no fixed place of business, then he will be called as a casual taxable person. Since he is having PAN, the normal registration form is enough for him, wherein he'll have to mark that he's registering as a CTP. Second, non-resident taxable person. Let's repeat the same set of questionnaire for non-resident taxable person. Now, first question to you for non-resident taxable person would be like, is he a resident? Non-resident taxable person. Is he a resident in India? No. Is he having some business in India? No. Is he coming to India for permanent business or occasional business? Occasional business. Now read the definition now. So you tell me, is he likely to have a PAN or he might not have a PAN? He is most likely to have a PAN or not to have a PAN? Might not, or he's most likely that he will not have a PAN. So non-resident taxable person is any person who occasionally undertakes transaction involving supply who has no fixed place of business or residence in India. Look at the definition. He may not have a PAN, so he has to give a passport and PAN of a representative. So he has a separate form for filling up for the registration. Okay. Now, what are the special provision we have for these people? Number one, their registration is valid for a period up to 90 days. Can they take registration for 5 days? Yes. 10 days? Yes. 30 days? Yes. 60 days? Yes. 100 days? No. Registration can only be up to 90 days. So yes, suppose he has taken registration. So all of these people are coming for exhibitions and then trade shows and stuff like that. Now, government is giving them easy exit options. They don't have to continue registration in a state after they finish their program. So suppose So there's a question from Shruti. I'll read the question for all of you. Does the fixed place of business include business done in a rented premises for a particular period? It does not. If you take rented premises for exhibitions, stall, that will not be considered to be a fixed place. Okay. But if you're taking the rented premises for a period more than 90 days or 180 days after extension, then we will consider it to be a permanent place. Okay. So it's up to you. With the places that you have taken on rent. If you have taken the place on rent and if you want to apply normal registration, you can apply. Okay. But with a stall receipt, you cannot do. Okay. So if you're having a temporary rental of a premise, you can always go ahead and then apply for a CTP registration. That's beneficial for you, right? You're not intending to do any permanent business there now. But if you're having a lease deed done for 1 year, then you cannot say I'm going to do temporary business here. Your lease deed is for 1 year. No, your validity is up to 90 days. Say you have taken initial registration for 5 days in an exhibition. Now that exhibition guy says the Thrissur Puram, okay, the exhibition is going on. So you've taken 5 days registration. After that, you understood the Thrissur Puram exhibition is going to be extended for another 5 days. You have to apply for another registration. Not required. You can extend it up for another period of 90 days. So if you have taken initially for 90 days, you can extend it for another 90 days. So totally 180 days registration you can keep. Now, normally within how many days you have to obtain registration? Normally you have to take registration within 30 days. Now think about it. I'm a casual taxable person coming to a state for 5 days. Can I ask him you register within 30 days? His business is over, he's gone. So they said for a CTP and an NRTP, you cannot wait for 30 days. You have to register before you start the business. How many days prior? At least 5 days prior to you start the business, you have to take registration. And generally, normally, no need for anybody to advance deposit taxes. But for this particular cases alone, for CTP and NRTP alone, they'll have to predict how much of sale they are going to make, and they have to advance deposit taxes for the estimated tax liability. Suppose they said, I'm going to sell 5 cars. So they'll have to advance deposit the 5 cars GST, then only they'll get the registration. What if they sold only 4 cars? One, they can refund. What if they sold 6 cars? They can pay that additional one. So there's a question from Vinag. If they extend the 90 days, will they will be considered to be having fixed price of business? No. If there is a circular clarification from part of GST department which says if there is a long-standing exhibition, see there are places where exhibition is permanent. Every time you go there, there's an exhibition going on. Have you seen places like that? Always there is an exhibition. So there's this temporary structure. Always you can go and shop there. So if the exhibition is going for a period more than 180 days, people cannot continue by taking CTP registration. They will have to apply for regular registration. Up to 180 days, initial 90, then 90, they can go with CTP. Okay. After that, you go for normal registration. I think the notes for the registration chapter is already shared. So somebody can again put it on the chat box. You can take help from them. Or I'm already telling you, like you can always. You can give me a text on this number. I'll give you all the notes, that is whatever is available freely. Also, I have a website. I'll upload it. The website like this, where I'm uploading all the notes and everything. You can make use of that. Anyway, so now you listen to me. Somebody asks, will they get a GST identification number? Definitely. And Vinayak has asked a question, is it for both CTP and NRTP? Yes, it is for both CTP and NRTP. Next, amendment of registration. What do you mean by amendment of registration? It's not like, the area where it's amendment, if it's an amendment for the exam. No. What if I have taken GST registration with my current phone number? I lost the phone. I have a new number now. Did I take a new registration? No. You can go and amend your registration certificate. So wherever you go and amend your registration certificate, we'll call it as amendment of registration. When can you do amendment? Most of the cases you can do amendment. Okay, you change the name of the company, change the place for your company, added a director, changed your email ID, mobile number. All of this can be updated in the portal as your registration, and your new registration certificate will be generated. But I was running my business as a sole proprietor. From sole proprietor, I changed my business to a partnership firm, or I changed from partnership to a company. So my PAN number for is changed for the new constitution. Can I change my GST number, update my PAN in the GST number? No. That is the note that you can see on the screen. When PAN changes due to reconstitution, when I say reconstitution, it means sole proprietor to partnership, partnership to private limited to public limited. So when there is a change in constitution, then you have to obtain new registration with the new constitution's PAN. Their updation is not allowed, or amendment is not allowed. So section 28 amendments are classified into two categories: core field and non-core field. Very simple, straightforward understanding. Core means very important field, like legal name, address, addition, deletion of partners, directors, CEO, etc. And non-core field means field where it is not very important, like change of email ID, phone number. The difference of procedure is very simple. If it is a core field, which means if it's a very important field, what is that to be done? You will have to go get an approval from the officer. Now the officer has an option to give you approval, so you'll have to apply within 15 days when you make the change, and you will have to apply within 15 days, and officer will give you approval for that. But if it's non-core field, do you have to apply? No. You can go ahead and then update by yourself. That is the difference that we have. Okay. So section 29 talks about cancellation or suspension of registration. Okay, we'll try to understand what is the meaning of cancellation or suspension of registration. There are two types of cancellation or suspension of registration that is allowed. One is called as voluntary cancellation by registered person. Second one is suo motu cancellation by proper officer. What do you mean by voluntary cancellation by registered person? Here, who is the person applying for cancellation? Is it done by the officer by his action, or it's done by the registered person himself? Voluntary cancellation is done by registered person himself. Why would I cancel my registration? Because I stopped my business. I sold my business. I changed my business to a new constitution. I'm no longer liable. In all these cases, what will I do? I will go and apply for cancellation of my registration. When I'm cancelling my registration, whatever stock is there with me, I am supposed to go and give these details and then pay the taxes. Now, there's an additional amendment that we had. Like, it's not a very recent amendment, but it's something that you have to remember. The term is suspension. Now, one very important point that you have to remember. So there are a lot of deadlines that you will learn in GST. Okay, so this is an examination tip for all of you. Generally, you have two dates given, and there is one option which says whichever is earlier. What will be the general answer? So option A is one date, option B is second date, option C is whichever is earlier. So generally the answer is what? Whichever is earlier. So wherever we have dates and time limits, we have seen it in yesterday's session also on ITC. There is a time limit for claiming ITC, or time limit for issuing credit note, or time limit for claiming ITC on debit note. We said it's 20th October next financial year, or date of filing annual return, whichever is earlier. So generally two dates are compared, it is earlier. Only in one case it will be whichever is later, and that is cancellation. So whenever you have a date compared in cancellation, instead of whichever is earlier, it will always be whichever is later. Remember, cancellation later, because I can go and then cancel from a retrospective date. So the moment I apply for cancellation, the date on which I have applied for cancellation or date from which cancellation is sought, whichever is later, on that date onwards, my registration registration is deemed to be suspended. Once the registration is suspended, I'm not supposed to make any taxable supply. I can't collect any taxes. Okay, so similarly, I don't need to file any returns. So they're saying that when you are applying for cancellation, that date onwards, you're suspended. Okay, you're not supposed to generate any e-bill or anything like that. The moment you apply for cancellation, from what date? Date of submission of application or cancellation is not, whichever is later. Say today, okay, on 28th of September, I'm applying for cancellation. From what date? I'm applying for cancellation from 1st of July. Okay, all the date. Can I cut off my registration from 1st of July itself? No, I will be having suspension from today. So I'm applying for cancellation today, but I'm applying, say that I want cancellation from 1st of November onwards. So my suspension will start from 1st of November onwards, which is the date on which I applied is today. I want it from a future date. So whichever is later, that is the date on which my registration will be suspended. Are you understanding? At that date onwards, I'm not supposed to generate an e-bill, no taxable supply, no returns, anything. Now, suo motu cancellation by, okay, you want me to repeat the whole thing? Okay, so what do you mean by suspension? Because it's a buffer period. Okay, I'll explain it once again since it's a new concept. It's a buffer period. So I apply for cancellation. So what is the cancellation that I'm talking of now? Voluntary cancellation. The registered person is applying for cancellation. They applied cancellation on 1st January. And they said they want cancellation from 1st March onwards. When will their registration get suspended? 1st March onwards, they will be suspended. Their registration will be suspended. Okay, so 1st January or 1st March, whichever is later, that date onwards, their suspension starts. Then after some time, cancellation order will come. So this buffer period between cancellation order and the effective date of suspension, that buffer period is called a suspension period. Are you understanding this? So during this period, they're not collecting any no taxable supply. They're saying you want cancellation, right? So the next day onwards, I'm suspending you. So the next time onwards, the next day onwards, do not furnish any return. No need to furnish any return, non-taxable supply. So don't collect taxes from the customer. Okay, you're now applying for cancellation. So you're suspended from the time your application is made and you're seeking date of cancellation, whichever is later. Okay. Now Monica has asked a question. Both dates can be the same. Yes. Which means you're asking application date and cancellation sort, right? You can apply on the same date and ask that I want cancellation from today. That's okay. So whichever is later, that date onwards, your suspension starts till you get the cancellation order. Once your cancellation order, your GST-IN is cancelled. It's gone. Here you have GST-IN, but you're not supposed to make any taxable supply, don't collect any taxes, because you are now somebody who's asking for cancellation. Because government is saying that what if he collects a lot of taxes during this period, I might not be able to go and catch him, because I'm going to cancel his GST registration number. Are you understanding this, everyone? Is it clear? Can I have a quick yes? Okay. This is called suspension. Now I have told you about cancellation by the registered person itself. Now what is one more cancellation that is possible? Like cancellation by the officer. The officer can come and cancel a registration when there are multiple reasons. I'll tell you a few reasons that's there on the notes. One, you did not contravention of provision. See, you are a wrong guy. Otherwise, why would the officer come and then cancel your registration? You've done something wrong. You're not following the provisions correctly. You're not conducting business from the designated places. You're giving invoice without supply. You're making profit out of GST benefits. You're supposed to pass it on. That's called as anti-profiteering. You did not file returns for continuous 6 months. You took the GST registration. You did not business for 6 months. You've taken registration by means of fraud. You've forged the document and then taken GST registration. You have not given all the information. In all of these reasons, the officer can come and cancel. So that's called a suo motu, self-motion. By his own action, he can cancel the registration. But there should be an opportunity of being heard, right? So what he will basically do is that he'll send you a shock cause notice asking you furnish me the reason within 7 days why I should not cancel your registration. If you don't reply within next 30 days, he will come up with a cancellation order and then cancel your registration. Now in the shock cause notice, he'll say which date onwards your registration suspended and all that. Okay, suspension is also there. Now revocation of cancellation, there's an amendment here. Be very careful about this. When can I make application for revocation? First of all, what do you mean by revocation? Revocation of cancellation, which is section 30. What do you mean by revocation of cancellation? Is it cancellation or is it cancellation of cancellation? Revocation means cancellation of cancellation, which means you're applying and saying that please remove my cancellation and give my GST number back. What kind of cancellation should be given this option? Voluntary cancellation or suo motu cancellation? In where this option will be there for the registered person? Only in suo motu cancellation. Because if you applied for cancellation, then you can't revoke it. But the officer gave you cancellation by suo motu, then you get an option, one more additional option. You go to apply to the officer and ask him to remove the cancellation and give you the GST number back. This is called as revocation of cancellation. Now for revocation of cancellation, the application needs to be made within 30 days from the order of cancellation. Generally, this application to be made within 30 days. Now there is an extension now. So now if you apply to the joint commissioner, you can extend up to another 30 days. And if it is commissioner, you can actually extend up to another 30 days. So let's look at an example there. What's the amendment? That is very important. So this is the last thing that I'm going to discuss in the session. So please have full attention here and look at this example in full. Okay. Now, revocation of cancellation section 30, it is applicable only in case of suo motu cancellation by proper officer. Suppose Raju is a registered person. He did not file return from 1st January 2021 onwards. 1 year the officer waited, no returns. So how many months return if it's not filed? Officer gets a chance to cancel 6 months. Enough. But 1 year he did not file. So the officer gave him so will the officer immediately give cancellation order or officer will give a shock cause notice? Officer came and gave a shock cause notice on 15th January. Officer gave a shock cause notice on 15th of January. Now no reply is received till 7 days from there. So he is supposed to reply within how many days? 7 days. So Raju was on global tour, maybe. No reply. 7 days is over. No reply is received. So 22nd January, what happens? No reply. So that date is over. Within next 30 days, he can cancel his registration. So 15th of February, we waited for almost a month. So 15th of February, the officer gave him a cancellation order. Now Raju is back to India. What is he seeing? Raju saw that in his mail, there are a couple of mails available. One mail is a shocker's notice. He did not reply. Another mail is a cancellation order. Now my question is, when can Raju apply for revocation? Raju now wants his GST number back. On his own, Raju does not want to apply to anybody, but by his own, till what date he can apply for revocation of cancellation? How many days he will get to do it? He'll get 30 days time. From what date? From cancellation order date. Within 30 days, he'll have to apply for revocation. So when was his cancellation order came in? It came on 15th of February. Okay. So 30 days means February, how many days left? 13 days. And to make it 30 days, 17 more days he'll get, which means before 17th of March, this fellow Raju can apply by himself. No problem. Okay. Now 17th of March, Raju did not apply. 17th of March only Raju came back. Now he wants to apply after 17th of March. Can he do that? Is he having an option now? Yes. Where he has to go and apply to get that extra days to apply for revocation? He can go to Joint Commissioner or Assistant Commissioner. He will get how many days extension for applying for revocation? 30 more days, which means from 17th of March, he'll get 30 more days. So in March, how many days left? Till 31st, 14 days. So before 16th of April, he wants to apply before 16th of April. So if he wants to apply before 16th of April, he can take the help of whom? Joint or Assistant Commissioner and apply for revocation. Now 16th April also he did not file revocation. Can he extend and can he file revocation even after that? Yes, but he has to go and apply to whom? He'll have to apply to Commissioner. So if you go to Assistant Commissioner or Joint Commissioner, you get 30 days extension. Another 30 days will be given if you go to Commissioner. This is an amendment. There's a high chance that there's a question that is going to be framed on this. So you go to Commissioner and he can get another 30 days, which means 16th of April. How many days left in April? 14 days. And 16th of May. So last day on which he can apply for revocation is 16th of May. Are you guys with me? So 16th of May, if he goes and then applies, with the approval of Commissioner, he can still apply for the revocation. Okay, this is the amendment that we have. Are you guys understanding? Okay. So this is what I have. My time is over. Actually, I have to wind up our session. Now I'll tell you what is that you have to do. Please go through the material that I've given you. Please look at the questions that I've given you as a question bank, and the amendments are going to be little important here in this particular chapter. There's an procedural part which you need to look at, like Aadhaar authentication is there. That is the only additional thing that you can go. So there are a few questions. Can you further go to Assistant Commissioner? No, he cannot go to Commissioner first. He'll have to go to the Joint Commissioner, Joint or Assistant Commissioner. He will go to the Commissioner only if that date for Joint and Assistant Commissioner is already over. Otherwise, Commissioner will go say that go to Joint and Assistant Commissioner. Why are you wasting my time? Okay. If that time is over, then you can go to the other one. I will upload both of the sessions, yesterday's session and today's session, on my YouTube channel. I am putting YouTube channel link on the chat box. You can subscribe it and then keep it. So I will upload. It is youtube.com/CA LIJIL LAKSHMAN. I will upload both of the classes on that. One very important information I want to give you. I want you to pass on this information to all of your friends. That on on 7th November evening, from 6 o'clock onwards, we are having a marathon revision on our YouTube channel, free revision for the entire topic. So you know that this time you have 2 days of gap. So I'll do a full revision of the concept and do like important questions also to be revised. It's going to be absolutely free because I don't think it's fair for me to advertise about my classes on these kind of platform. I do have classes coming up for workout and all that, which you can. I will prefer you to text me directly and then get those information because it's a generic public platform and it's not fair that I advertise. So I don't do that. So if you want classes and all that, you can always reach out to me. I've given you my number, right? So I'm linked out the number. This is my academics number. You can always reach out to me, or you can connect me on any social media platform that you find convenient. So examination tip, definitely I can give you that. I'll tell you the approach that you have to do. For GST examination, I'll take another 2-3 minutes and I'll close it. I've already told you the time. Uh, so for the examination, you have to change the order. Don't go chapter number 1, 2, 3. No. If you're studying GST, you start with charge chapter. Go to time of supply, go to value of supply, go to ITC. This is the order in which you should first finish those chapters. Charge, time of supply, then go to value of supply, ITC. You finish these. Then go to exemption, supply, registration. Then go to exemption, supply, and registration. These are the next 3 lot. Okay. So never start with introduction and then supply. No, because you're going to waste a lot of time. Your energy has to be given for these chapters. Charge, because everywhere the charge impacts and you need to have understanding to solve a lot of questions. Charge, time of supply, value of supply, and ITC. Then go to exemption, supply, registration. Then go to the procedure part. Then go to introduction. In procedure part, please note these topics. In invoice chapter, there were 3 basic extra topics that we had, like maybe 4. Due date of invoice, tested last time. E-invoicing, tested last to last time. Evable, tested like few attempts back. And there is dynamic QR code. So I'm predicting that in the next exam, there is a high chance that they'll ask you a question on dynamic QR code. So check it out in your textbook. What is dynamic QR code? Probably if you need any help on understanding that, you can reach out to me. I can look at I'll upload the amendments on YouTube as well. Then if you look at return chapter, QRMP, if they want to ask a question, they'll ask QRMP, but they've asked that question last time already. So the QRMP question would be slightly on the theory side this time, if at all they want to ask. Payment chapter. Okay, again, payment chapter. These are all like not very important chapters, but payment chapter, please watch full of section 50, interest. Okay. So amendment videos you can expect in another 2 days, guys. Like before 30th, I'll finish that and upload it. Okay. I've already uploaded those in my lectures, but I will give you those in free videos in YouTube as well. 2 more days I'll consolidate and then give you. But the notes are available. You can always reach out to me. If you're already attended some class of mine, I'm comfortable sharing my whole notes with you. I have no problem with that. So that's it. So please ensure that you cover this up. Now, if you don't have enough time, don't go through the whole textbook. Now you can look at some notes. Yeah. And so like the chart notes that I've uploaded on my website. It's free. You can look at that. And in the textbook, please look at all the illustration and examples. That's how you should go ahead and then cover this up. Okay, so that's it, guys. I'm very happy that Sikasa Kozhikode has taken this effort to conduct such events, and I hope to provide my support to these kind of events in the future as well. And I wish all the very best to all of you who have attended this session, and I appreciate your patient listening throughout the session. And if you need any help on GST, please ensure that you reach out to me, and I'll be more than happy to help. And please remember about our 7th November free sessions. If you need any support, please reach out to me for that. So please let me know your results You have my number. Please let me know yourself. Let me be a part of your results as well. So if Sikasa Koikod wants to conclude the session, I would hand over the session to them. Thank you.
Thank you, sir. Thank you so much for your